All right, let's dive right in. We're looking at the 2026 crypto market. And let me tell you, the game has completely changed. If your entire strategy is still built around the Bitcoin halving cycle, you might be in for a serious shock. I mean, major Wall Street reports are basically calling it. The old era is over. So let's get into it.
So let's just cut to the chase, right? The big question on everyone's mind. For years, that 4-year boom and bust cycle was like the law of gravity for crypto investing. But what if that entire rulebook has just been tossed out the window?
And look, this isn't just some random theory. We're talking about heavy hitters like Fidelity, Grayscale, and Bitwise, all singing the same tune. The market isn't just following a pattern anymore. Its entire structure, its very DNA has been rewritten. So how on earth did we get here?
To really get a grip on the future, we have to take a quick look back at what just happened. Remember all the hype going into 2025? The predictions for Bitcoin were just astronomical. So what went wrong with those calls for a $250,000 Bitcoin? Well, the biggest mistake came down to this one simple error: linear extrapolation. It's a fancy way of saying everyone just assumed the past would repeat itself forever. They saw the Bitcoin ETFs get approved and thought, great, institutional money is here, it's a straight line to the moon. But they totally missed a massive piece of the puzzle. And this is where you can really see the disconnect. While the public was hearing about $250,000 Bitcoin and piling in, the big institutions were playing a completely different game. For every dollar they bought in an ETF, they were also selling a futures contract on the side. They weren't just betting on the price going up, they were hedging their bets. And what was the result of all this financial jujitsu? Well, they created a market-neutral position. So while the ETF money was trying to push the price up, their futures bets were acting like a giant weight, pushing it back down. It totally killed the momentum. The market didn't boom, but it didn't crash either. It just got stuck in this phase of volatility compression. All that explosive energy just got squashed. Okay, so that brings us directly to where we are now, the new reality. The old days of wild, retail-driven fear and greed, they're fading. They're being replaced by a much more calculated institutional playbook. The whole game has shifted from chasing these insane booms to building slow, steady, long-term growth. This slide just lays it all out, side by side. On the left, you've got the past, an emotional roller coaster driven by FOMO, leading to those soul-crushing 80% crashes, all dictated by the halving. And on the right, that's the future, a market driven by cold, hard strategy from institutions, leading to much milder dips that have more to do with the global economy than any crypto-specific cycle. And here's the bottom line on why. The new players here, we're talking pension funds, they don't panic sell. They're in it for the long haul. Plus, as Fidelity points out, Bitcoin is just too big now to pull off another 10x gain. It's like trying to get a cruise ship to do a 180 on a dime. Its volatility is actually starting to look a lot more like a big tech stock than some crazy digital lottery ticket. Now let's talk about the one thing that used to be crypto's biggest enemy: regulation. Believe it or not, what was once the biggest headwind is now turning into a massive tailwind. It looks like we're heading into what a lot of people are calling a policy honeymoon in 2026, where all that uncertainty is finally being replaced with clear rules of the road. And look, this isn't just wishful thinking. We're talking about actual laws getting passed. The Stablecoin Act basically gives crypto dollars the same legitimacy as money in a bank. The Clarity Act ends that ridiculous turf war between the SEC and the CFTC, which, you guessed it, paves the way for ETFs for things like Solana. And maybe the biggest deal of all, we're seeing actual countries start to treat Bitcoin as a strategic asset, kicking off a kind of global digital arms race.
All right, so if you thought Wall Street coming in was a big deal, you need to buckle up. Because what's coming next is on a whole other level, almost straight out of science fiction. This is where AI and crypto collide, creating a brand new concept that could totally redefine money: agentic finance.
Think about this for a second. What happens when an AI can have its own bank account? AIs can't walk into a bank and show an ID, right? But what if they could have their own wallet, living right on the blockchain? And that is the whole mind-blowing idea behind agentic finance. We're talking about autonomous AI programs, these agents that can literally generate their own wallet, own crypto, pay for the computer power they use, and even invest to make more money. They become their own economic entities, operating 24/7, 365. And again, this isn't some far-off future. Galaxy Digital is putting a number on it, and it is a huge number. They predict that by 2026, 30% of all transactions on Coinbase's Base network will be started by these AI agents. That's a fundamental rewiring of how capital moves on-chain. So of course, this brings up a massive question. How in the world do you police an army of autonomous trading bots? Well, that's where this brand new compliance idea comes from: KYA, or Know Your Agent. It's basically a framework to verify an AI's code and behavior before it gets to play in the DeFi sandbox, making sure it doesn't go rogue. Right, so if you're going to have millions of AI agents all transacting at once, you're going to need a blockchain that's, well, insanely fast. This is kicking off a whole new technology arms race, a battle for who can provide the infrastructure for this AI revolution.
So the whole conversation is changing. It's not about being an Ethereum killer anymore. Who cares? The new game is all about high-performance execution. Basically, who can build the fastest engine for these AIs? Right now, Solana's out in front, but you've got challengers like Monad and Sui coming up fast. And this is also where the fat app thesis comes in. The idea is that the real value won't just be in the blockchain itself, but in the apps built on top that are actually generating cash flow, like an AI asset manager that earns fees for its token holders.
Okay, so let's pull all of this together. We've got this new institutional world, this crazy AI revolution, and this tech race unfolding. What does that actually mean for the 2026 outlook? And maybe more importantly, what are the new landmines we need to watch out for?
All right, let's talk numbers. The institutional price targets are starting to form a consensus. Arthur Hayes is looking at a range around 120K. JP Morgan, comparing Bitcoin to gold, sees a fair value somewhere between 150K and 170K. And then you've got Bitwise, which is even more bullish, looking at over 200K. The key takeaway here is that even without the old crazy cycle, the pros still see a ton of upside.
But it's not all sunshine and rainbows. You gotta be smart about the new risks. First, regulation is a double-edged sword. It could legitimize the space, but also come down hard on privacy projects. Second, more AI means way more sophisticated hacks and scams. And finally, there's this risk in DeFi called the paradox of composability. The very thing that makes it cool, how all the protocols plug into each other, also means that if one piece breaks, it can cause a massive domino effect across the whole system.
So here it is, the single most important thing to take away from all of this. The goal is no longer about trying to perfectly time the top and bottom of a predictable cycle. That's the old way of thinking. In this new, more mature market, the new goal is to actually understand the complex system that's being built. And that really leaves you with one final question to ask yourself as we head into 2026. With all the old rules gone, are you just going to be a speculator, basically gambling on price? Or are you going to become a strategist, somebody who understands this new system and can position yourself to thrive in it? In this new world, that choice is everything.